Good afternoon. We're going to cover the watch list for the week of December 2nd. The watch list is fairly big, not too bad. And to make sure that you write down all the tickers, all the levels, the expectations, the targets, and stuff like that, because my watch lists have been very accurate the last few weeks. I know when you watch it before anything happens, it seems kind of far-fetched, but as the week plays out, that a lot of it ends up happening the way I expect it to. So I would write down everything and be prepared for what I expect to happen. And a lot of people have been like calling this a money list because that's what it's been lately. It's pretty dead on accurate for the most part. And if you're not in the room, my Discord room, the description is in the link is in the description. Check it out. It's free to join, but if you want the alerts, you have to pay for a subscription, which is just a very small fee compared to almost all services that are out there. And we have a lot of features with the room too that are very valuable. Okay, that out of the way. First, we get Disney up. Disney just put out a piece where Frozen 2 is the highest grossing in Thanksgiving history. We like to hear that. That means more money, a lot more money for Disney. And so Disney, the dips have been good. The morning dips have been good just about every day for the last 2 weeks. So I would expect the same to continue until it doesn't work. But however, you have the hourly on the right and you have the daily on the left. And as you can see on the hourly, you get higher lows, and the bottom is pretty much flat. And it's pretty much a descending bearish triangle. So it's possible it could, close the gap down under 150, and if it does, it'd be a good area to buy. But it could just take off too because of the news on Frozen. So as you can see right here, it did pretty much the same thing. It had like it started wedging down, then it broke out right here. So I mean, Disney, I think, is you keep buying the morning dips until it doesn't work. And worst case scenario, if it does break the descending triangle, look for under 150 for a possible entry. And on the daily, I mean, it's pretty extended, but I mean, Disney's got a lot going for it right now. Like I said, with Frozen and the subscribers, I wouldn't be a bit surprised if they launch out another PR saying that they're getting a lot more subscribers and blah blah blah, and the stock ends up going to 160, 165 or something like that this week. So I mean, at 165, 160 is pretty far-fetched, but if they drop news about some kind of subscription bombshell, I mean, it could easily get up into the 160s. So keep an eye out for that news. And the next one we have is, let's see, it's Dollar Tree. This one I'll be watching very closely. It's, gap down big time, but, it's around Christmas time. A lot of people are going to end up buying stuff from at Dollar Tree. These dollar store stocks will start getting some momentum from people buying, people strapped for cash and they buy presents, or they need to buy other little knickknacks, stockings, stuffers, or whatever. So I am looking for it at 90. I like to see it get to 90, and if it does, I'll start looking for a possible bounce. On the weekly, I'll bring up the weekly really quick. I have it on my other screen, but you can't see it, but I'll bring it up here. As you can see, it likes to why is my thing doing that? Oh, hold on, something happened. There we go. The weekly, the 90 area is pretty solid. It's got a little bit of support right here, but worst case scenario is 88 on the weekly. But I don't think it's going to get that far. Every time Dollar Tree has a huge knife, it likes to pop up huge too. So this is due for a very strong reversal. So that's why it's going to be one to watch closely. Because when it does reverse, it's going to be pretty big. So the next one is and if it does break out, I'm looking for 94. 95 to possibly even retest the 98 gap resistance on the gap down. So that's what I'll be looking for a target. Now I also have HT, which is Home Depot. Home Depot, we called it last week and it did pretty good. It got up higher than I expected. I think I called up to 220 or something like that, and it went all the way up to 223, 224. So, but yeah, I would look for, possibly if it can get over the 222 area, I would look for another rip higher. And if it does that, if it does get over the 222, it's going to create a little cup and handle right here. If it does do that on the hourly, and if it gets over the 224, it's going to rocket and probably close the gap. So I would watch for a potential cup and handle form on the hourly over 222 would be a position I would look to go long on Home Depot with a target of 226 to 228, but I would look for definitely the gap to close here for our first target and second target 228 on Home Depot. Now we also have, I already did Disney. McDonald's has been it's very choppy, very, very choppy. But I think if it can get over the 196, even if it gets down to the 192, below or under 192, I might just grab calls again. But if it doesn't get down that low, it's definitely worth a buy over 195.50 or even the 196 area. You can buy calls in that area with a target of if it gets over that 196, I think it can run to 200. So I would look for a run to 200, possibly even 204 right here, as you can see. Now the thing to look for is the weekly on McDonald's. It's got a nice weekly. As you can see, it's consolidating right here on the weekly. So if it does get over this area, it's got a shot to really break out. But I would, like I said, I'd keep it conservative. 200, 204 is definitely more on the conservative side for McDonald's. What is the next one? I can't even read my own handwriting. Oh, TXN, which is Texas Instrument, I believe. Yeah. And I know it looks kind of extended on the hourly, but it's pulled back to the middle Celt on the hourly. So it could possibly bounce right here. It's at fairly decent support. It could pull back to the 119.50 area right in here. Could pull back to that, but I'm looking at the daily though. If it can get up over the 122, I'd be looking for a gap fill right here. So the 122 would be the striking point. If it does dip, you could try to catch the knife into the, let's see, the 119.50 area. But yeah, I'd be looking for over 122. That's where I'd actually be looking for a gap fill. Now, the last one I have on the bullish side, these are all bullish, by the way, obviously, if you can tell. But the last one I have on this is Wayfair. Now, Wayfair, I think this is due for a pop. It's got the same kind of chart as like McDonald's. It's consolidating on the weekly and the daily. This is the daily right here, and the chop fast on the hourly right here. It gets over this $88 range. That's where I'd be looking for, a gap fill to 100. So if it can get over that, it's got a high probability of going for a gap fill. You can see on the weekly right here. It's been in there 1, 2, 3, 4 weeks right here. It's been consolidating. And look what it did right over here. Did pretty much the same thing. And when it took off, it took off. So it had a big, nice green candle right there. It could be this week, could be next week or the week after. But I would keep it on your watch list. We'll keep an eye on it until it does make that big move on the weekly. So over 88 for a gap fill is the call on Wayfair. Now on the bear side, I have a little more. Obviously, because people always think I'm a bear, because I'm really not. It's just the market being this overextended. I'm prepared for something bad to happen. So that's why I'm leaning towards the short side. It seems like a lot lately. So first one on the list is John Deere. I mean, this one has just been like on a tear. Then it had bad ER. I can't remember. I think that's what it was. ER brought it down. So, right here, it's kind of like starting a bearish flag, bearish wedge, whatever. So under 167 for short on Deere, and I'd be looking to down to 163 to 160-ish. But the thing you want to really look at is the weekly. The weekly is, see, as you can see right here, it broke out and it's come back to retest it. So I wouldn't be surprised if this gets down into the 160 range for a pullback down to the 30 SMA on the weekly. So that's what I'm looking for on Deere short. Get this set back up. Next one I have is Tesla. A lot of people are gonna not like this one, but I don't really like plain Tesla. But right here, I mean, it's wedging. You can see the line. I drew it on one of my charts on StockTwits and Twitter. It's got a bearish like formation going on. So I would look for under 320, 327. Don't even need to be under 327. Under 328. Look for a short to cover, I don't know, right around 320 area to 315. But the weekly has a bigger picture. I mean, look at this. I mean, it gets into this 360 range and it just dumps. So I mean, every time it's gotten in this 360 range, it went over it, pulled back to 310. So I wouldn't be a bit surprised. 310 would be a nice little area. I mean, here, boom, 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 boom. This thing is just dumping every time it gets over 360. So 310 area, possibly even 300. So on the weekly. Now next one is get this thing set up. It's Target. Now Target, I think this is going to pull back. Another, a bearish wedge going on, descending triangle right here. I mean, 1, 2, it breaks below this 125. And we're going to go down to the gap support, which is right around 121.50. So, I mean, it could stall out in the 124, 123.50 area. But, I mean, you look at the daily, I mean, it's going to fill this gap and just collapse, it looks like. But, I mean, it didn't here. I mean, it looked like it was going to here, but it didn't. So, but the weekly, let's see. Yeah, the weekly is just so stretched. Let's bring it out more. Let's bring it up to a 5-year. Yeah. Yeah, it broke out over the 114 on the weekly. So yeah, I'm definitely looking for this on the short side than I am on the long. I mean, it can break out and go long, and if it does, I'm not really interested. I want to see this break down to at least the 122 area. That's what I'd be looking for on Target. Next one is Boeing. Now, as you can see with Boeing, you get a nice little head and shoulders on the daily. I mean, I think it's gonna like another little wedge going on. Gets under 365 or even 366. I mean, you could possibly see it dump to 361 to 358. And even down to the 354 area. So the head and shoulders could play out. I mean, Boeing could drop bad news at any time. So I think, it gets below this middle kill on the daily, which is around the 365 area. I mean, the gloves are off. It will just sink. I mean, look at it right here. I mean, it's got the same kind of pattern right here as it does right here. And just look at knifed. I mean, from 368 to 344. But that's a huge red candle. That's probably a news event on that day. So that can't expect that kind of a move. But we can definitely expect a 5-point move if it drops. So on BA. The next one is QCOM. This one's going to be tricky because it's right in the middle of an area where it could do multiple things. I mean, last week I said it was going to go lower. It was going to break this 84, and it did. It did. It covered the gap, but there's also another gap on the hourly down at the 50 area. So, I mean, I would not buy it right here. I mean, it can bounce, but I just get still like a head and shoulders still pattern. So I mean, it did technically break it right here, but I mean, I just don't. It's due for a reversal. I just don't trust it right now. If it filled the gap down here in the 80 area, I would definitely revisit it for a long. But right now, I'm just gonna watch it, and if it does drop more, I'll look for it around $80. So, I mean, if it drops like hard on Monday to $80, I might grab calls for a swing or something. So, that's what I'm looking for on that. NVIDIA, the semiconductors have been getting hit. So, I mean, it's got the same thing going on. It's got the, bearish wedge, under 216. Look for a short to fill the gap to the 211 area. And the daily, it's just been, every time it drops, it likes to test the middle celt there, down here. So, if it does fill the, I'm just looking for it to fill the gap. And if it does fill the gap, I said 211, I mean, it's going to go to the middle celt. So that would be the area I'd be looking for, the 211, 210 area for NVIDIA. Unless something happens, and if something does happen, it could sink a lot further if it gets under the 208 area. But I'm just going to be conservative and say the 211, 210. Baba is the next one. Now, and Baba is just on a tear. It's it's consolidating up here over the 200. 200 is a big psychological number, so I mean it could break out. I think last week I called that it was going to break out, and it did. And I think it's going to break down this time, and I would be looking for it under 199. And the reason I look for it to pull back and fill the gap fill is 195. Is the weekly. And I'll show you that. Now, don't want to go back that far. Now look at the weekly. Every time it gets up to 200, it gets rejected. Yeah, I've gone over here a couple weeks, but it doesn't like it over 200. And with all this noise going on with China and Hong Kong and Taiwan and all this other crap going on, that something could freak the market out. Something could happen with China, and the Baba and Baidu will just tank hard on any negative news. So that's what I'd be watching for. I mean, it gets over the 200. It doesn't like it up here, and this is too much political risk and too much noise going on in the world for it to maintain above 200. So I mean, I could be wrong. It could keep going, but over 200, I don't like it. So I'll be looking for a short under, like I said, 190. Say 199, even 198. Get underneath that and go for a gap fill on Baba. Next one is going to be this one's I've never traded, but I'll be looking for it. Is Burl? I believe it's Burlington. Yeah, Burlington Stores. Now the reason I'm watching this is because it's consolidating into like a bearish, descending triangle right here. Boom, boom. So, if it does sink below the 224, you can look for 220. I have never played this one before. So I'm going to be very cautious. I don't know what the options look like on it. Let's see if I can see the options chain. I have that priced fairly reasonably. The strike intervals are 250, so they're not too bad. Meaning each strike price is $2.50 apart from each other. So this stock can really move. I mean, 224. Yeah, I can move to it. It's probably get an ATR of probably 2 or 3. Yeah, it's gonna probably has a higher ATR, probably 4. Okay, but yeah, that's what I'd be watching on Burlington. Like I said, I've never traded it. I'd be cautious. Next one is Roku. I know everyone loves Roku. Now, Roku, I mean, I put out a chart over the weekend, Roku possibly double topping, blah, blah, blah. I mean, I called the cup and handle right here perfectly, and it broke out. Now I'm saying possible double top on the daily. And, you know, it is on the hourly, it is doing an ascending wedge. I mean, it could break out, and it could really double top to this area, which is the 175, but I don't know, it seems to have a hard time over the 169 area. So if it doesn't break out, I mean, look for a short under probably the 158, and, you know, for 153 to 148. 148 probably be the really big target for a reversal, which is right here. Well, 149. Yeah, actually not 148, 149. So I would look for it to retest this breakout of the cup and handle on Roku. I mean, like I said, it can certainly go higher. And if Disney does well, Roku will probably do well too, because Roku seems to be following Disney for the most part, or Disney following Roku. They seem to be correlating in some weird fashion, but I think I'm leaning towards the more of the bearish side on Roku on that one. So, like I said, it's either or, but I'm more bearish than bullish on it. And the other one I haven't traded in a long time is BlackRock. Now, I think BlackRock's got an interesting weekly on it. See, on the hourly, it's, you know, it's kind of got like a nice little big bull flag. You know, it's kind of like bouncing back and forth on the hourly and the daily. Now the weekly, let's see. Let me break it down a little more. I mean, it could certainly break out more, but the last few times it's gotten over this area, it's gotten rejected. So, I mean, it's come a long way. It's almost gone up 100 points. So, I mean, back here, it's done pretty much the same thing, consolidated, went up higher. So, I would keep this on your watch list. You know, it gets over 500. I mean, it could go all the way up to almost 520. But I think it's, you know, it's going to end up being a false breakout. You know, it's broken out, but I wouldn't be a bit surprised if this thing drops. And if it drops, you know, I'd be looking for probably under the 493 to cover right around the 484. You know, it's been so long, I don't know what the option chain looks like. Yeah, the option chain's fairly expensive, but not too bad. You might want to avoid that because it's kind of expensive. They're kind of priced like Netflix and Boeing and stuff like that. But yeah, I would be looking for under 494. I mean, not 490, 493 to the 484 for like a short-term day trade or something. But like I said, it could break out, but I don't know. The market conditions, if it's red this week, I think that BlackRock's going to drop with it. So that's my take on that. That one's going to be kind of iffy. If that's one to ignore on the watch list, I mean, BlackRock would probably be one of them. But I just wanted to point it out just in case, because it's got potential and it has potential to make big moves. Now, the last one I have is the healthcare section. It seems like I'm always covering this thing because it just seems so overbought. And I'm waiting for this thing to crash down. And, you know, I have UNH up for right now. I mean, right here, I mean, it broke out and it got to the 283. And I think, you know, it gets below the 278. This thing's going to come crumbling down to the 274. So I'd watch it below 278. And the reason I think this week's probably get a higher probability of doing something. If something happens in the market goes red, and also it's like double topping on the weekly. So, I mean, look at this insane move. I mean, every time it makes large moves, it pulls back on the weekly. So it's made a huge, insane move. It's gonna pull back at least to the 272 area on the weekly. Maybe not in a week, but at least in a couple of weeks. So I would think UNH is definitely worth watching for a pullback this week and next week. It's just so overextended on the weekly. And on the hourly, the 14 SMA is curling down, and it's getting ready to cross the 30, and below 278, it's pretty much over for it. Not over, but I mean, it could definitely drop to the 274 area. So that's what I'm watching for on the UNH CI, which is Cigna. I mean, you can do that one too instead of UNH. I mean, it's just look at this. It's just gone straight up. I mean, it just keeps going up and up and up and up, and now it's starting to show some kind of weakness. I mean, I guess you could say a little head and shoulders right here on the hourly, so, under 198, for what to 196, then to possibly 192 on the hourly for a target. So that's going to be it for the watch list for next week or this week coming up, and we'll see how this week plays out. Just write down the levels and the targets and the expectations, and happy trading.